Hello, hello, hello. How's everybody doing? Just setting up. Bear with me. Going live on YouTube now. 20 seconds in. Let's have a little look at this. Let's have a look. So that's wow. That's amazing. All right, we're live there. Let's get the link for this. Just setting up. Bear with me. Alright, so here we go. So we're going to stick that there, get that there. And also here, so we are live now. And let's get set up on here as well. Right, good. And then we want to go in the Discord as well. Hope everybody's doing alright. And Zoom is setting up now. And Zoom now. Do 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 do. Share the screen. Let's get that over there. Let's get that one on there. Stick that there. Pull that up there. It's gone a bit wonky. There we go. And where is it? Oh, where's it gone? It's annoying when it just disappears like that. Zoom, zoom, zoom. There we go. Get rid of that. So let's get everybody in. Yeah, let's do this. How's everybody doing today? Happy Friday, everyone. How's everyone on YouTube? Everyone good on the YouTube? Hello, Alex. Hello. How's your morning been? I've been busy. I've been flat out. I've had 3 hours sleep. I got up too early, and woke up too early. Went to bed late. You know. Hello, Tyson. How you doing? All right.
I'm fine. I've been chilling. Like I'm waiting until start raining again.
We have.
You've seen,
Yeah. No. It's good. It's good. It's good.
Happy with how it ended.
Yeah.
As you think, because like I came from a 7% strata, then you really opened my eyes.
Yeah.
Using
Yeah.
better risk,
Yeah.
better positions.
Yeah. No. Glad I could help. Hello, JFX. Hello, Chris B and Chris D. Benita. Hello, Kyle, Luca, Manny, MJH. Oh yeah, MJH. Good. Yubraj. Hello, Novak. Yeah, see, I like that. Novak, straight to the point. Novak. Hello. Congratulations to Benita for passing, and so you are now a funded trader.
Oh, thank you, Alex. It's all down to you.
No, not me. Not down to me. It's down to you. It's down to you. You've got to do it. You've got to do the work.
Oh no. I really learned a lot about risk management and everything from you. Thank you. That's where I was going wrong.
Wow.
I've got 5 days left, I think, and then because you have to trade minimum
Yeah,
5 days,
I see that.
and then I'll fill all the forms in or whatever and get the account.
That's all right. It's all right. It's good.
Yeah.
I'm gonna.
Yeah.
Yeah. No, it is. It's really good. It's really good. I'm gonna let everybody know that we have a funded trader in our live sesh today.
I mean, you're like 3 300k funded. Wow.
Yeah, I mean, it's neither here nor there. I mean, what I do is just a bit of I'm just doing some back testing and some yeah. I mean, don't include me
I'm
into that.
learning from you,
I've
the
been
master.
training a long time. It's 300k is not my yeah. I'm not worried about 300k. Put it that way. Not to sound like I'm bragging or anything like that, but that's yeah. What I'm doing is completely different. You guys are starting on your journey. I've been doing this journey. I'm coming to an hopefully coming to an end of with my journey, trading journey.
Yeah, of course.
I'll give it until next year, next July at the latest. Yeah, next July we'll say. So July 2022. Depends really. I mean, it depends. I might stick around. Hopefully less than that, but I might stick around a little longer. It just depends what's going on with what's going on in the world. You know, we're looking at
Yeah, of course.
4 or 5 year plans with these projects and COVID projects and programs. They call them programs, and it all sounds a bit. Yeah, it's all a bit worrying, really.
Yeah, yeah. But you know, Forex has sort of really given us the freedom, hopefully, that we can be pandemic proof, you know.
Yes,
So
yes.
hopefully, and you want to trade the three strategies on your three accounts. I'm really looking forward to seeing your
Oh yeah, yeah.
updates on that.
So this is yeah. I'll end up just losing it all now and blowing it all.
No,
That's-
you won't. You won't. I am so impressed with your gold strategies, and it's amazing.
Yeah. Well, we want to have something tangible. So then, if somebody says, "Here, look, here's a strategy," then there are some results that you can show people and to back up your results. Because so far, the results are a little bit hit and miss and a bit patchy and a bit sketchy. To be fair, because I've never had the need to have to verify to anybody. You know, I'm not accountable to anyone.
Yeah,
Um,
yeah, you have to trade by their rules. Yeah,
Yeah, and also I don't normally I've got nothing to prove to anybody, so there's that aspect as well. And so now, I think if people want to, want to use these strategies, it's nice to have some sort of confidence or belief that they actually do work and they are something that you can employ and implement and apply to your own trading. And so, yeah, gold strategy, yeah, Chris. So the gold these are just my three strategies that I use, but it's just I've traded gold. You can trade anything, trade any instrument. They all move the same. Doesn't
yeah,
matter.
yeah.
Doesn't matter what it is, does it?
I was trying the 764, and it's just to the pip sometimes. It's amazing. So I'm just gonna keep trying that one for now, and then I'll do the momentum and the divergence. But I really like the 764. Amazing.
Yeah, no, they're all right. They're all right. So I've linked them up to a MyFX book, and let's have a look. A MyFX book is here. Let's see if I can have a look at this quickly. Yeah, I mean, just to show very quickly what I'm doing. So that's where we're at the moment. So I've split the strategies into, so I've got three. So we operate. So we'll just take. So it's clear cut divergence 764 MT strategy, which is the momentum strategy, and they're the strategies. So that's we're just gonna keep
Brilliant. Do you
keep a
have a
record.
link for that?
No, and I'm not going to give it out either. It's not yet. Not yet. Maybe in a year's time or 6 months' time. Maybe once
Oh
I
yeah, all right.
once I've got something tangible. Because there's no point doing that and then putting pressure on yourself, and then something happens where
Yeah, yeah.
it doesn't work, or they don't work as well as I'm thinking they're supposed to work, and just it's just psychology. Stop messing around with
No
things.
pressure. No
Yeah,
pressure.
and then I'll end up looking all
Fair
right.
enough.
I'll end up looking all right, idiot. It'd just be like, okay, so much for that.
No, no, but it's a really good idea. I'm really happy
So
to
yeah, I'll just
go
giving
with
giving you an indication. I want to do this for my own personal record. So then maybe if all goes well, we can link
Yeah.
things up and say, okay, look, this is working, and and also I want to see which strategy is more powerful. We can do it over, say, the next 6 to 12 months, and that will give us an indication as well for seasonal changes, and just try and get a good variation. We have to consider all the variables. There's so many little variables with how things work in trading, and things change all the time. Thanks for doing a YouTube session. Yeah, that's all right. But Zoom, yeah, Zoom sometimes lags. It can do. I find Zoom doesn't lag compared with some of them, but yeah, no, it's cool. Any questions? We are going to, yeah, gonna crack on then. Let's have a look. I've got a couple of good little setups, a couple of good little things, and start with the euro dollar. Let's start with euro dollar. And I'm going to switch to gold, and then we can do some of the pound pairs, and then you can ask me any questions. Anyone want to look at anything else while we're here as well? So let's have a look.
What are your
Yeah.
What are you thinking about cable for now?
Oh well,
Since,
we'll have a look at that, and we'll do euro, and then we'll do cable. So euro dollar, I've got this up on the weekly, and you can see that it's obviously been in a bullish trend. Let's just whack a trend line on here quickly, so it just gives us a bit of clarity as to what we're looking at and how it's moving. See if we can cut through some of those bottom candles just to touch those top ones. So I think a really pronounced one sticking out there is here, where we consolidated sideways, and we have a double bottom where we had yeah, a bit of consolidating around, what price was that? This is probably around $1.17. It's going back to last year, November, and then we had another pump up, didn't we? So we've had a couple of legs up. So that's important. So I'll put the trend line there. It's cutting through some of the bottom candles here, but I want to, we're looking for always 2 points of contact with any form of support and resistance, because then it draws your eyes to that support and resistance, and the idea then is you will be looking for the third test or the third point of contact, and you want to really see how that reacts when it tests a level of support and resistance for a third time. So you'll hear people talk about double tops, which is nice, but obviously a triple top is more powerful because it's obviously testing that level of support or resistance for a third time. And the more times something gets tested, a level gets tested and retested, the more relevant it becomes, right? So then that if it fails at that level, it's powerful. If it breaks that level, then that's a good indication that it's going to break out and continue. So retests are really important. So with any form of support and resistance, whether you use trend lines or fibs or EMAs. So I've just put that on there, just wanted to highlight. So we had the stab down, it's rejected. That was last week. This week we're in a bullish trend. So if I drill down, we can drill down to the daily and focus on this bit of price action. Currently just seeing a little bit of a retrace off the 50. Pretty perfect, in fact. So could we drop? We could drop to the trend line again. We could drop here before continuing to go up. Friday, for me, Fridays are a scalper's day. So Friday equals scalp day. I don't look to try and make all my money on a Friday, if trading at all on a Friday. You shouldn't have to make your money on a Friday. What have you been doing between Monday and Thursday? You have 5 chances to make money, 5 chances a week. So if you take one trade a day, on average, and you bank 0.5% or 1%, you've done well. So yeah, let's have a look at this. Let's just let's switch this up a minute quickly. This is what may happen. Could see something like this. How do we do that there? Oh, it didn't apply. Euro dollar could go something like that. If it does it want to do it? Okay, get it on there again. Let's have another go. All right, there we go. Could do something like that. And maybe have like a 38 or a 50% retrace of that little move before continuing to something like that. We'd look for that 764 ultimately. I mean, it's not an exact science, is it? It might go like this, zigzag a little bit. But right now, this is a daily and we're just having a bit of a pullback. So it could just stop here, couldn't it, at the 38? But if I drill down further, let's look at this bit of current range price action. Let's look at this. So this is how we do a top-down analysis. You start from the higher ranges and then the higher time frames, and then you drill down. So you wanna really look at the what sort of price action we can get. So we've had a really good move up. I was saying this yesterday with the euro dollar. It's a good example of any chart, really. 300 pip move. Let's get rid of that. 300 pips, isn't it? Let's see, where's the high on this? 123.50 roughly, down to 119.50. Sorry, that's 400. No, yeah, it is 300 pip. 300 pip range. We've had what's that? 150 pip retracement to 121.50. So euro dollar's moving really, really well in terms of the range, the retracements. Everything's quite measured and quite calm at the moment, which is quite nice. So that's one that you might want to put on your radar, on your watch list, because it's looking quite nice to trade. Another currency pair to look at would be Aussie dollar as well. That's been moving quite nicely, you know. So there's a 50% bounce. If I drill down to say 1 hour and just focus on this bit of price action, what we would do here is we could do it like this. For example, we could take that low, take that high. Let's mute all your mics as well. There you go. Make sure your mics are muted unless you want something to say. That's it. Let's have a look at this. So 38.2. We're sitting at 38.2 so far. So we've retraced 38.2. It's almost like a head and shoulders trying to form. This reminds me of the gold trade that we took the other day. Well, from yesterday actually. I'll show you gold in a minute. So we're consolidating. So you just want to see, we've had a pullback. It needs to break the 38. If it breaks the 38, and look at dollar strength as well. Look at the dollar index. Look at other dollar pairs. It's trying to break it right now. 121. What's that? 121. 121.03 roughly. Yeah, about 120. Yeah, about 121, isn't it? €1. $1.21. Okay, let's strip back all the other fibs so you can really see what I'm talking about here. So we've had a 50% move up of the bigger range. So what we can do here is we can highlight this one, and what I tend to do is pull them back so they're not. So I've got them as reference, you know, like that. There you go. And I just pull them back, and then we want to focus on what's happening right now. And what's happening right now is this, you know. So if it breaks that level right now here, then we may start to see a bit more of a deeper correction, and so targeting around about 120.80 on the euro dollar. So 120.80. Why? Because we have a first major fib retracement level down to here, and it's you know, also around the 38.2 is also around that 120.80. Euro dollar likes the 80 number. It also likes the 20 number. You'll see that these levels, they tend to just be relevant. You know, when you look historically back through the charts through time. So that's my take on it. May get to here, and then we might see a bit of a rally this afternoon, or we might just see a sell-off. And clearly, if it breaks all these levels and breaks through that trend line, I'd say for Friday afternoon, if it was going to continue being bearish and it breaks here, I'd say T1 around 120.74, so 120.80. Because I always round up. I always want to make sure that I'm, you know, not taking it, squeezing every pip out of a move. I like to allow a little bit of wiggle room, because it's never an exact science. So about 120.80, it's about 20 odd pips down to the first target. And then if we do break down, maybe go and test that trend line that I highlighted on the high time frame. That's why I started on a weekly. So it's a weekly trend line. It's relevant. You can see the way the price is kind of respecting it. Gone up here, pulled back on it. And in conjunction with our fibs, that's a 50%, so around 120.50. So potential 50 odd pip retracement from current standing, which would give you ultimately total value would be 100 pip pullback. So 100 pip correction. So what have we got? We've gone up. Actually, it's a 200 pip move, isn't it? My maths is way off. I didn't sleep last night. We've had a 400 pip range. We've got a 400 pip range. 400 pip range on euro dollar. We've had a 200 pip retracement, and we're now pulling back about 100 pips. But everything is kind of measured, is what I'm saying. Euro dollar's moving in good measurements, in sort of 50 and 100 pip measurements. It's quite nice. So that's why I sort of wanted to draw your attention to euro dollar, because it's just moving well. And the fact that it's sitting at the round number right now, allow it to make a move. If it decides to go up, leave it. You know, let it go up and do what it needs to do. But if it decides to try and break this bit of consolidation, then you've got your targets. You've got a T1 and a T2. Maybe take half off here, move your stop to break even, and then hold it for a T2. You know, there's no drama. It's just trading with the current retracement, the current trend. Bear with me 2 secs. Right, let's move on. Let's move on to pound dollar very, very quickly, and we'll have a look at gold as well. So pound dollar. Hope that makes sense. Any questions that you want to ask about euro dollar quickly? Any questions regarding euro dollar?
I wanted to ask about the 764 really quickly.
Regarding on what though? On the euro dollar?
Like in general.
Oh, okay. Yeah, we can do that in a minute. There we go. Look, there's the move happening on. So you can get a good sniper entry here, and you can put your stops just above here at 121.15. Yeah, potentially pretty decent. Euro dollar bearish bias. Nice. So it's going well. Let's have a look at dollar index then quickly. Maybe need to have a quick look at the dollar index just to see, because I haven't looked at the dollar index yet. Just to double check everything that it all matches up. Dollar index is.
Isn't dollar gaining a bit of strength because I saw something with they were talking to China or something?
Oh well, yeah, maybe. I mean, at the end of the day, China owns the US. Sorry, US citizens.
Yeah, basically.
But you know, they do own a lot of the debt, and you know, so why do you think they didn't go over there to? Why don't you think they went over to Wuhan to investigate when he had an outbreak? Why didn't anyone go over there and check it out? Why have they been able to just do what they want to do? Anyway, we won't go into that. It's politics, but yeah, a lot of it's just common sense. Let's have a look at this. This is what we're on, a 4-hour chart on the dollar index. We've had a double bottom here, retest. So currently, this is the range that we are in. I anticipate it touching at 38.2 at least. So it's correlated nicely with the euro dollar. So euro dollar to go down to 38.2, like I just explained, and dollar index to maybe pump up to at least a 38.2, if not a 50% of this range. So keep an eye on your dollar index, have that to hand, have that around, because obviously you want to know what's dollar doing right now. And we are, after all, day trading. We're not looking for swing or weekly, monthly, yearly trading. We're looking at what's going on right now. So what is happening now? Is it bullish bias? Is it bearish bias? Establish that. Understand what's happening. Yeah, so Alex, on euro dollar anyway, maybe an Elliott second wave. Yeah, maybe, possibly. Elliott wave, we won't go into that today, but I've done a video, it's in my playlist on Elliott waves. I've given some good examples. It's good if you can identify Elliott wave, because it's just a way of monitoring price action. You know, it's a really good way of monitoring price action. It's quite powerful when there is an Elliott wave in play. Yeah, it just helps you to get into a trend, wave 3 in particular, and you can make your week's money on that move because you're in a trend and you know that this is a trending move. Because a lot of people will be thinking, is this going to trend? Is it going to actually give us the move, or is this just going to be a little move? So with an Elliott wave, it helps you identify whether or not we have scope or potential for the bigger move. So Elliott wave is something that you should look at. Google it, Elliott wave, Elliott with a double T, double L. But I've done a video on it. It's in my playlist. Yeah, look, playlist there. I can send it out to you. But yeah, just have a look. Right, I want to keep these sessions short today. It's Friday. I'm tired. Let's go to pound dollar cable. Okay, pound dollar. Structurally, it could drop back as well to 137.50. Likes that 50 number. Loves a 50. There's a 38.2 there. It's also testing previous structure. Nice area to drop back down to. Hasn't quite got down there yet. It's just toying around. Who knows? We've got bullish bias on pound pairs anyway, and I am, after all, looking to continue to buy the pullbacks. You know, looking for 140 really. Ultimately, 140 and above. We're so close to 140, and we're going basically back up to pre-referendum, pre-Brexit highs. Now, for 4 years, the government have procrastinated over here. They've done nothing. For 4 years, they could have sorted out Brexit a lot quicker, but they haven't. It's only just been sorted out. It seems like we needed to have people dying and COVID to sort of say, okay, we need to sort out Brexit. It's strange. But so now we're allowing the pound to get on with it and to go back up and to go back up to hit these levels here. So this is a weekly chart. This is pre-referendum levels. We were trading in the 140s, $1.40, and we've been sat around that 76.4 at 136.76. So 136.76. So just shy of 137 round number, which is, to be fair, where is that? That's just underneath all of this price action, all of this, all of this consolidating action up here, which is going back to. When's this go back to? This goes back to 20. What are we on here? This is 2018. Is that right? That doesn't seem right. Where's 2016? We should be looking at pre-referendum levels. Where's the big move down? Here we go. Oh, this is the move. I always look at that, but this is the move. See that big wick? That was when we had Brexit referendum, voting to leave the EU. Just in case somebody asks me, what's the referendum? What's Brexit? I'm like, and people have asked me, believe it or not, people have asked me. Even like the last person to ask me was probably just a few months ago. I'm like, are you really trading? Blimey, you might as well go and put your money in the casino. But it is what it is. So yeah, there you go. So yeah, we want to go back up. It's an impulsive move. So we've had this impulsive move, and there's the correction. Impulsive, corrective. We're going up there again for a third retest. We're breaking above the 76.4 of this bigger range. We keep pumping, don't we? We keep pumping, and it keeps pumping bullish momentum. It could fall down though at any point. It could just tap out 139. And then it could just collapse. So you got to be really careful. You can't just buy at the top here. You got to buy the dips. So that's all we've been doing. I mean, this week we did have a bit of a struggle trying to buy this up. It did stall 138.66. I mean, it was a bit of a struggle. So we have to allow this to drop back now. But it's a counter trend move, and unless the 76.4, that's the rule really. Unless the 764 gets taken out of this last swing high, this last range, we're still bullish, and so any move to the downside can take as long as it wants, because it's a counter trend move, and so you don't anticipate or expect just quite a quick sell off or a nice move to the downside, because it's a counter trend move. If there is going to be any spike to the downside, you can appreciate that that's most likely a manipulative spike down to do a bit of liquidity grabbing, a bit of a stop hunt. So remember, it's a counter trend. It's easier to go with the trend. Trade with the trend, right? Counter trend moves are not. Yeah.
Besides AUD USD, what pairs are the most fifth trending?
All of them. They all work. Everything's the same. Have a look at crypto, Bitcoin. Put your fibs on the Bitcoin. It all works. It doesn't discriminate. They all work. Dollar, yeah, of course, it's breaking. So
Okay.
there you go. I gave you an entry on that. I've given you stops and targets for euro dollar. That's a freebie Friday. There you go. Easy money. It was there. Zero drawdown. You got zero drawdown. Focus on what's been given to you instead of trying to look for something else. I've just handed you some free money. Roll up, free money time. It's there. Anyway, let's have a look at so where are we at with this. So pound dollar's a bit more fickle, so it's going to faff about and it's going to do all this. But I'm not bearish on pound pair, so I would rather not take a short on this unless of course we had some divergence. This is my euro dollar at the moment. Just want to show you euro dollar with regards to this current pullback that we're in. So again, another 10 pips or so down to 120.80 would be ideal, really. But yeah, it's already given you 10 pips straight from the off. Look, on the hour as well, pretty much. Let's have a look at this. It's my hour candle. So that's quite nice. We even had a signal on my software to say to go short. So yeah, that was just reinforcing it really. And where are we sat? We're sat at the 38.2. It's testing it, but it's like grains of sand. It's trying to seep through. Or it's like water. You're trying to hold water in your hand. It's just seeping through. It's slowly going. So it's just a case of being patient and waiting for it. But pretty much as we were talking about it, that's the setup. So it's quite nice. After TP1, so someone's just asked me about T1. So like I just said, with the trades, I take half off at T1, move my stop to break even, and done. So you've banked some money, and it's a free trade. You know, free money, and it's done. Obviously, if things do trend, then you'll get loads out of it. Yeah, go on. What was you going to ask me?
Sorry, mate. Sorry to interrupt there.
No, you're
So,
all right.
quick question. So this software,
Software. Oh, so I shouldn't have mentioned the software. People start getting excited about the software. It's my own software, proprietary software. It's something that you buy and pay thousands of pounds for, which is not worth your time. So you don't need it. You don't need any of this. You just the simpler the better, really. It's not going to tell. It's not going to tell you how to trade, really. But yeah,
trading view is more than
So
Yeah,
you
yeah,
sell
it's-
robots.
sorry, mate. What was that?
So you sell trading robots.
Trading robots. We should
Robots.
you should be shorting gold, by the way. Yeah, we don't do robots. How do you manage to trade off TB1? Okay, so that's that done. That's where we're at now. We're pound pairs. We've got divergence on the 1 hour on the pound. We were looking for it to tap out at 138.76, 138.80 area. Would have been nice, and we could have short, but it 10 pips shy. So it's not an exact science sometimes, but we've had divergence, and so really, are we going to get down to 137.60 previous structure? Quite possible. Keep an eye on the pound to do its little move back as well, because that's sat at a round number 138. It's not as clean as the euro dollar. The euro dollar was a nicer one, and euro dollar's already given you profit, so that's just a case of managing that. Now, if you don't like the look of it, or it decides to go back up to your entry on the euro dollar, then it's up to you if you want to just close it out for a break even. But ideally, you just want to jump on it. Small risk anyway. It was only like a 10 to 15 pip stop. So yeah, okay. So pound is done. A bigger move down would be a much deeper correction. What was I saying with regards to this? The rules of engagement really, in terms of looking for a change in trend, would be that you take the last swing high. In this case, pound dollar. Take that last swing high, and it can retrace, right? So it can retrace the previous structure around 137.50 area, like I've just identified, 137.58 roughly to 137.51. So round it up, 52 to 58. If you want to be more conservative, 137.60 could be a good downside level on pound. And then what we're saying is, assuming we are still bullish with pound, so what we would expect to see is for it to hold here and to bounce and go back up. Now, if it starts to tear on down through these fibs, then it's still bullish, and so this is still just seen as a correction all the way down to, in this case, 136.40, which is a 76.4. So there's a lot of importance on this last fib, because it is the last fib before we have a full retracement. So if it breaks the 76.4, the chances are that we are going to have a trend change, and that we'll see a much deeper sell-off, a much bigger sell-off, and we start looking at the pound as being in a bearish trend. So that's why it's so important, this 764, because for me it would be a case of shorting it down to the 76.4, maybe getting in here, let it hit this level, take profit. If it goes up here and fails and then drops again, could be the start of an Elliott wave. So wave 1, wave 2 pullback, and then sell off down to here. And then obviously if it breaks this level, what that's allowing us to do is say, okay, it's broken a key level of support here, and it's allowing us to get in to short this at a better entry. Rather than wait for it to get all the way down here and give you a double bottom, you don't want to wait, because you want to get a decent entry, right? Short. So for me, rather than getting up here and try and be all heroic and get in and think that this is going to be anything more than just a corrective pullback in a bullish trend, I need more confirmation. So as a safer plays, allow it to come down here. And you can have fun with it. You could potentially short, keep shorting off these fibs and keep shorting for the next fib, and then the next fib, and the next fib. And just safely get your entries in each time. Pull back, short, with momentum, an MT strategy. You know, and then sell it until you get down here. And then when it gets to 136.40 to 136.50, you know, stop. See what happens. It might find some structure there and then decide to rally back up and resume the bullish trend. But then obviously if it breaks this level, so it could do something like this, you know, go to like the 50, and then we could see a bit of a 764 retracement up here somewhere, not quite take out that previous high, and then we see the confirmation that it goes down to here, and then from there, who knows? It might faff a little bit. I expect it to react at this level though. I expect it to do that. Something like that maybe. Or if it can put in a little bit of a retrace but stay firmly bearish, then yeah, I expect it to tear on down through. Now if it retests this area here and it breaks 136.40, then I would start looking for bearish momentum. I'd start looking to short it. And what that's allowing me to do is get a decent entry up here somewhere, as opposed to waiting for it to get down to here. In actual fact, then my entry could be something like here as a short, and then my T1 could be somewhere like here, or an extension level down here. So it just allows me to get a decent entry on. So that's why the fibs are so important, because it helps you track and monitor and stalk the price action. So we are all about price action, because people say, oh, I'm just a price action trader. I'm like, yeah, but I like to see where the levels are that it's going to respect and what it does at these levels and how it reacts. So we're observers. We observe price. And then when it reacts off these levels, because I know these levels are here, then I can see, I can decide what to do next. I take action according to what the price is telling me what to do. Right now it's saying it's going to go down, but how far? I'm not sure. It can get to here. That's my first target. 137.50 area. What's it going to do after that though? Is it just going to shoot back up and continue to be bullish? It might just dip down below this previous structure just to suck in a few sellers, and you think, oh yeah, this is going to sell off. Yeah, I'm getting in down, and it just takes you out. It goes up. And in terms of Elliott wave, what look for is a 764 between a 61.8 and a 76.4 retracement. So say it did this. See, look at that. I just guessed it as a pullback approximately. It would pull back to something like that. So this would be wave 1, wave 2 pullback, doesn't take out the high, and so we're starting a wave 3, which is a much bigger move. That confirms that we're not going long. It fails. It's a failure to the upside. And at that point, you can say, you know what, I'm going to get in here. I might short it at the 7.6 and sell it down to the next 7.6 of the last range. Sounds confusing, right? But this is how we use. We're dynamic with our fibs. Fib levels are dynamic. They're not static. You don't just plot them one time on one chart and expect to use those levels for absolutely everything. They're not generic like that. It's not meant to be used like that. It's a tool. So you adapt it. So I'm taking at the moment, I'm focused on the retracement down. If it finds one of these fibs without hitting this and it goes up, then I'm gonna apply the fibs again to the next range, which I've just done here, and look at what it's going to do next. And when it hits this level, then I'll sell it. And my stop can be just above. So this is how I get my sniper entries, with no drawdown or little bit of a drawdown. And if it doesn't work out, well, what's the worst that's going to happen? It's going to go up here. I'm going to just close it, let it retest the high, and then decide what it wants to do next. You know, that's what I would do. But my risk is small. My stop loss is tight. Everything's very controlled. And the risk to reward factor here would be decent, you know. So yeah, just understand price action, but use support and resistance. The fibs are primary in terms of support and resistance. Everything else like EMAs, trend lines, these order block Mickey Mouse zones, supply and demand zones are just that. They give you an idea, but they're a zone. It's like, well, you know, it gets in here somewhere, but it's not precise enough for me. Sometimes these zones are like 50 pips. That's what I've been saying. where are you going to put your stop? I don't want to have a 50 pip zone for price to stop there, think about it, if but maybe. I need it to be a bit more on point. If I'm going to put money on this, I want it to be where I want it to be, not, oh, somewhere around there will do. You know, it's like somewhere around there doesn't cut it. I end up getting stopped out before it goes in. You know, the amount of times you see it you get stopped out because your stop loss was wrong. And then it goes in your direction. And you're sitting there going, oh, it's like because you didn't have the right, clear enough, concise information. Because you base it on this. And it's not an exact science. This is quite possible it's going to come down here, take out that previous structure, dip down below this zone, and then shoot on up and take you out or go in your direction or whatever. So, you know, price action 101, use your fibs. They're first and foremost. Plot some zones for added confluence. Plot some EMAs like this for added confluence, you know, to see. I turn them on and off so I can see, because they're not, you know, I want to keep the charts clean. That's an 8 EMA, that's a 21 EMA, that's a 50 EMA, that's my 200 EMA. This is daily time frame, so rightly so, my 200 is way down here. My 50 is a good target, back down to previous structure, previous low. That's a good one. By the time it gets down here, price, this EMA could come up to here to add some added support to my 764. Yes, mate. Let's take that off as well.
I might have a stupid question, but
Just watch the video again.
how,
And
like I know
yeah.
what spreads are.
Okay.
I know what spreads are, but for example, why is it like bigger on USD CAD than on a major? Is it just because minor and major, or?
Yeah, so if you imagine when I was trading, initially started trading Forex, so I started trading Forex, I think back in about, really taking it seriously, I'd done things like, oh, god damn, this thing just finishes so quick, 40 minutes already. Right, well, I'll just try and keep it short and sweet, but what can you do? Sorry guys, let me just reload this. Anyone on YouTube, you're alright. Let's just share that. Let's get that on there, and let's get this on here. Come on, get that up. Right. Okay. Let me switch this up to gold as well. I'm going to look at gold now. I want to do gold, and then we can look at other things as well. Why is it not doing it? Just admit all. It should just work. I need to change the presets on this Zoom. We need to just see. I would pay for an upgrade on Zoom. I would pay for it, but then it just means I could just sit here for hours, and I don't want to waste my time hours doing this. It's not productive. You know, you won't absorb the information. There's only so. I mean, what I've just explained there in detail and about, you know, talking about price action. That's enough information for you to take away, and just to remind yourself and just to roll with it. And I'm sure that most of you have already got that sort of price action nailed, but maybe you don't really know it off by heart, or maybe it's not too clear for you. Maybe, but yeah. So we're going to do another 30 minutes, 40 minutes, and then we can finish. So let me do gold, and let me answer some questions. Any questions for euro dollar or pound dollar? Any more questions? What's it doing there? No, good. We've got time now.
I have a quick question.
Yep.
So you mentioned that you would observe the price at which is key level 764, and then wait to see how it reacts. So what exactly are you looking at that level, and how long you would like do the 40 to 15 minutes chart or 30 minutes chart?
Yeah, you can use, yeah.
For like 1 or 2 candles.
Yeah, yeah.
Reject it.
Yeah.
Something like that.
Yeah, pretty much. Sometimes it just touches it and bounces off and sells off hard. And you won't see it if you're on a 4-hour chart. So you'll need the 5-minute chart. You need a 1-minute chart. You need your 15-minute chart. You need your smaller charts, don't you? Because what you're looking for is you're looking for the banks, the institutions. You're looking for them to pump some money in at the levels that you're that you're looking at. And so if they, you know, if you get a reaction at that level, you're on point, and it means you're onto something. It's like, oh, okay, so it reacted off that level, and that was the level I was looking at, and I thought it might react off that level, and it's done exactly what I thought it would do. And so then, yeah, and you'll see it. It's more evident, isn't it, on a smaller time frame. Obviously, you need to. I try and discourage smaller time frame analysis because a lot of it's noise, and unless you're experienced as a trader, you've been looking at charts for years and years and years. Sometimes people have trouble understanding, is that just a bit of fluctuation, like someone's just sneezed kind of fluctuation, or is that actually real? Is that actually going to be a genuine pump, and that's the start of a move because the banks have come in and they're putting money in, because they're the ones taking all the risks, they're the ones that have got to put the money in, so they're the ones that have got to make that move happen. I made my first 40 pip move this morning.
That could be something hard or difficult for new traders to, you know, like make sense of it. That this is,
It does, but that's why this technical analysis is so important. And like you've asked proper questions there, and it's not an exact science. You need to look sometimes at market, depending on what pair you're trading as well. It depends. There's certain variables. So things to consider. If it's 3 o'clock in the morning during the Asian session, you've no business trading that session anyway. But if you are and you're that bored, because understandably we're in lockdown, what else have you got to do? And it might be that you're in that part of the world anyway, so it's morning or afternoon for you. So you're going to understand, where's the volume? Is there volume going on? Somebody shared with me yesterday that they were, they're taking a trade on a dollar CAD 3 o'clock in the morning during the Asian session. And I said to them, well, why are you trading dollar CAD? Dollar CAD is for US traders, Canadian traders. They're not around at 3 o'clock in the morning necessarily. It might be late for them, so some might. But think about what sort of people are around trading that time of day or night. They're the sort of people you want to be trading with, because for me, I want to be trading when the banks are trading. I want to be trading key sessions. London session, European session, American session, US session. I want to be trading those times. So understand that. Also consider what it is you're trading. How does it move? What's the average daily range of that instrument? If it's gold, you can get 200-300 pip move, no problem. If it's Aussie dollar, you might get 70 pips out of it in a day. So you've got to consider that. So when you're looking at the entry, appreciate that it might just sit there and consolidate for 1 or 2 candles, 5 minute, 10 minute, 15 minute. It could do 2 hours of consolidation before it moves. Or it might just touch it and bounce off and go straight in the direction that you want. So it's not an exact science. You have to kind of just look. And that's what you're doing as a trader. You are a risk manager. You're a risk manager. You're assessing the risk and saying, is now the right time? Should I take the risk now, or should I wait? And then you need to wait for certain confirmations. Hopefully that makes sense. Yeah, Luca, what was you going to ask?
Yeah. Alex, but you said that there's no such a thing as US session and stuff.
No, I didn't say that. No. It's just when I remember when you shared that with the websites. Certain websites, they say they're highlighting the crossover. They're highlighting when traders are coming in from different parts of the world as a guide. So you take that as a guide, because Forex, if I was in America right now and I was up at like 4 or 5 in the morning, I can trade Forex. My broker will allow me to trade Forex. The American brokers will allow American traders to trade Forex. They don't have to wait until what you highlighted as being 8 a.m. New York time, 1 p.m. London time before they're allowed to place a trade. It's Forex, so it's 24/7 or 24/5, 5 days a week, all day, all night. But what we're saying is the only things that open and close are the actual stock markets. So the cash opening. So if you want to buy stocks and shares, you have a certain window, so many hours to do that, to actually go to your broker and say you want to buy shares in Tesla. You've got a few hours to do it. You can't buy Tesla shares at 10 o'clock at night because the market's closed. They won't give you the quote. They won't give you the price. So that's what we were saying. I've already answered this question. So you have this, why bring, I've already explained that to you. But I'd answer it there for you, because thanks for bringing it up, because it allows me then to just share that with everyone else. But I think most people would be aware of that. So yeah.
Okay, I see clear.
Yeah, it's I don't
Thanks.
think, yeah, because I think sometimes, what would you do if you was in America? You think, oh no, I can't trade until 1 o'clock. I can't trade until 8 a.m. It's like, well, no, that's, yeah. So anyway, there you go. What you might tend to see happen at certain times is it's what I've just explained. Actually, I don't want to trade the Asian session because it's really quiet. I want to trade when there's volume, which means when there's traders around, and so key levels. So, but it doesn't stop me from putting a trade on before a certain time. There's no time. There's no opening bell. Right. Okay. Just another question. Do your favourite pairs for support and resistance? You mean this pairs? All the pairs, everything does the same thing. Everything. Pull up a chart and do some technical analysis. Have a look at crypto. Have a look at anything. Oil, gold, anything. We're going to look at gold right now. And I'm just showing exactly what it's doing and exactly how we made some money this week. Yeah, I mean, we made money. We made money long on this, and we made money short on it. Let's have a look at the weekly. Actually, let's have a look at the monthly, because the monthly tells you the bigger picture. So the bigger picture, you can see it's been bearish last month, and it's been bearish this month. We did, for a minute there, go up and turn bullish on the month, but it's rejected. I've got strong trendline resistance. It bounced off it and rejected. So let's drill down. So we're bearish on the month. So I've been mindful of that when I'm taking a trade. Weekly is right now, we're at the opening price roughly around 1810 again, all the way back down there, and it's giving it back. So it's swinging. So there's some good money to be made trading gold at the moment. It's been really nice, range bound. And Camry 2020 TRD crack me up. Why don't you just put Camry or TRDC or something? I don't know what to call you. It's a mouthful to say it. It's like saying supercalifragilisticexpialidocious. I like Scalper Joe. That's a good name. That's a good name. Yeah, so you made 40 pips today, this morning, trading the 764 strategy. And what did you trade that off or on? What currency pair? What did you do? Give us a little bit of detail as to what you did. Made money short. You just mentioned there also. What Kyle? On where, Kyle? Yeah. Anyway, let's drill down again. So weekly is undecided at the moment. We're Friday now, into Friday. Let's see how gold closes this week. Let's see if it closes bullish on the week or bearish. If it closes bullish, then we might see a bit of a move up. If it closes bearish, again, it's like, where does it close? If it closes around that 764, which I've just told you about in terms of a measurement. So let's look at that in a little bit more detail. This is my T2, right, on gold. So shorting it from the break of the 1840s yesterday, bearish, down to T1 was a 50% because it broke on down through the 38. So I said, okay, 1820, nice area. 1819.67. So I round it up, 1820, job done. So that's hit T1. That did that this morning. I woke up about 3 o'clock this morning and I saw it. I thought, okay, that's cool, nice. Are you shorted EU? Oh, nice work. 40 pips off EU is very good. That's a pretty generous move. So it's done T1. We've extended so far, and we've extended 61.8 of this range so far. This is the daily. Can we stretch down with the US traders? I think the US traders might actually take it down a little lower. Might take it down to my target, which is 180196. So you can round it up, round it down, whatever. It's just around about that 1800 level. It's a nice big round number. We could settle down here for the as we go into the weekend, or we could stall around here and then gap down over the weekend, or sell off Sunday night, Monday down to here. Just when is, you never know when. Timing is everything. But yeah, downside potential is still there. Let me show you again. Drill down into a 4 hour head and shoulders formation. We had a huge sell-off last week, and then Sunday night. So Sunday night we basically, Why is that like that? That should be on it. There you go. So Sunday night we started rallying, didn't we? Sunday night we rallied on gold. And the reason I want to show you that is because that was my target up here, 76.4. And it did that. It was a really, really powerful move from 1785. This is what's nice about gold. You can really get some solid moves out of it. And even if you miss it, when it starts to trend, you stand out, you know, you get out of the way, you go with the trend. When gold moves, it moves. So you don't get worried about where to enter necessarily, but what you have to consider is, you know, you're asking about fibs and certain things, understand certain pairs and certain instruments, how they move, and you can't put a 20 pip stop loss on gold. You can maybe with Aussie dollar, but you can't trade them in the same way. The best way to trade gold is swing trading it. So allow a 100 pip stop loss. You know, that's how you do it. Because it seems to be bearish and it come up, touch the 50. Okay, so you did an MT strategy, not 764. Yeah, okay, I did wonder. This is a 764. So gold moved up a bit and then it carried on going. It pumped up again and it consolidated and then it pumped up again. And so it was like with the news, I got in long here, 1842, took it to 1852. Why did I take it to 1852? Well, because we've got a 764 here at around 1854. And 1852, if I look here on my hour time frame, 1851.7, so 1852 was a 38.2. So I'm using fibs on all sorts of time frames. I'm just using fibs predominantly. They just work. Such a good move. Look, a 38.2 retrace. We had a pump and a dump. We went up, hit target, 100 pips, done. Then it sold off, 100 pips come off there. And we were live the other day talking about this potential sell-off because somebody was trying, Chris was trying to scalp this long up here. And I said, well, you've got to be careful because you're up here now and it's done all of this move already. You know, huge movement. And so you're buying at the top and it might not necessarily just turn and keep going up and giving you bullish momentum. And it didn't. I'd say if anything, it needed to drop down. And it did. It done exactly what we thought. And it consolidated and it gave us a head and shoulders. And so selling. And when it sold here and broke through all of the EMAs on the 1 hour and started to curl over with all of our indicators, it gave us some bearish momentum. A corrective pullback. There you go. Makes sense, right? It's corrective pullback. It's markets move like this, right? They don't just go up in a straight line. And this, to be fair, had moved in a fantastic straight line up. Hadn't really stopped. So head and shoulders, broke. I put a trend line on here, broke the trend line, started tearing on down yesterday, shorted it. Took a long on here, made money long. Took a short on here, shorted it with the head and shoulders. You guys understand the head and shoulders? It's a very common pattern. It's a confluence. It's not something you can use primarily. It's too obvious, not powerful enough just to use on its own. But yeah, there you go. So then targets are 50% and not 618, but ideally looking for lower. But it might stall at the 618, but looking for down here ultimately. And then, as I said to you, if it breaks a 764, if anything breaks a 764, it's a powerful area. I expect it to bounce off there. 1800, I expect to see some buying come in from there. But if it broke there, then I anticipate it actually going down to retest the low, and it turns into a strong bearish move. It's quite a big deal then for us, you know, for anything on a higher time frame, any instrument. If it breaks a 764 of the last range, and then in this case this range is pretty substantial, then it's quite bearish. It could just tear on down. We could see 765 again. 1765. What's at 1765? 1765 is a 127 extension of this range. Good fib extension level. What's also there? Let's go to like a weekly and show you. Here, 1764.57. That's the previous low. So with all of this faffing about, goes down a bit, bounces up. That bounced off the 764 of this range. If I cut all this out now, so we don't want to use this at the moment, so we can get rid of this one. Don't need that at all. Just like to use them to show for the record and for reference. We had here, if we plotted the fibs here, fibs just work. Look, 764, big spike up, double top up here, rejection, came down to the 76.4 around 1810, bounce off 1810, bounce off the 764. Use that 764 strategy. It's in my playlist on YouTube. There are also examples in that playlist of how I've used 764 to trade things like gold and other instruments, and it's just so accurate, so powerful. You buy it here, you put your stop below the low. In this case, around 180102, somewhere like that. You're getting in at around 1810. You know, it's an 80 pip stop. That's what I'm saying. You need to swing trade gold because you can't go in with a 20 pip stop because you're just dumb if you do that. Gold moves 300 pips. You're trying to trade it. I can appreciate trying to get a sniper entry. If you're able to do it, great. But it could just wick you out in with a 1 minute candle. You know, so you've got to be mindful of that. Understand what you're trading, what instruments. Stop scalping gold as well. It's just so frantic, scalping it, and so aggressive. Don't be so aggressive with gold. Allow it to make the moves. And when it makes the moves, jump on it and capitalise. It's not rocket science. It's you. You're just awful. You try and micromanage everything. You're so like pressured to make money, and gold is not one to do it. Gold will just ruin you. So be mindful of how you trade it. And anyway, there you go. So where are we at now? Anything else? What else shall we look at? Hopefully you can play this video back. We'll keep it short and sweet. I'm not going to do anything else. And if that's everything, let's clear some of this stuff. Let's clear it all off and just leave that one. That's it. I'm going to just leave that like that, so we can focus on what's currently happening. Drill down to a 4 hour and then a 1 hour. Any more questions? Has that been useful? You found some useful information? Hopefully. Makes sense. Make money long, make money short. Happy days. Anything else? No? Good. Let's see what questions you guys have sent here. Question pairs. If the pound dollar is bullish, do we always see the pound New Zealand, for example, will always be bearish? No, not necessarily. No. That's not a correlation. It's not a correlation. If it's a pound move, it's a pound move. You'll see all pound pairs go up or down. If it's a New Zealand move, it might move differently. Sure, and you have to look at correlations with other things. So pound Aussie and pound New Zealand might do their own thing. I've seen them go down when pound dollar and pound yen have gone up. You know, sure. Do I ever look at currency strength meters? No, not really. I just look at the charts and I can see higher time frame analysis and say, what's it doing today? Is it bullish or bearish? Okay, it's bullish. All right, let's see if we can find some longs. That's it. And then you start building a plan. We're like the A-team. You know, we work with what we've got. And don't you just love it when a plan comes together? You know, it's just, that's it. We just keep it simple. It's a never-ending buffet as well. The biggest element that you have to focus on is self-development. It should be 80% self-development. Learn, backtest, and understand how to backtest as well. Backtesting involves taking a trade 100 times with your strategy, 100 trades with your strategy, and having a spreadsheet of some sort, and recording your results. 100 times doing the same thing. That's what backtesting is. 100 times doing the same thing. Well, I've yet to see your 100 trades doing exactly the same trade, the same thing. So you've got to show me that. You say you backtest, you spent hours backtesting today. I'm like thinking, what are you backtesting? I have no idea. So send it to me and let's go over it. It has to be 100 trades on the same thing. Maybe pick the same time frame, 1 hour time frame, or 4 hour time frame, or whatever time frame, on the same instrument 100 times. That's what you need to show me. That's, if you're going to show me something, anyone out there wants to show me anything, that's what you need to do. That's backtesting. Do yourself a favour and do it properly. Not a bit here, bit there, and let's just hope for the best, and you know, and some wishy-washy. Oh yeah, I did this. It's just whatever. If it's my strategy, it's even better. Then we can talk about it, and I can help you with that because it's my strategy and I know what I'm talking about. You show me some of your trading ideas and all that. That's fine as well, but I might not get it, or I probably will get it. But you know, what do you want me to do? You want me to endorse? You want me to endorse your strategies? I can. You know, just note that if it's mine, then yeah, I've got no problem with it. But trading is subjective, and you need to be able to just do your own thing. And it's nice to be your own independent trader. And I can be a little bit overbearing, a bit controlling, a bit like micromanaging. That's my nature. I'm conscious of that. But yeah, you don't have to pay any attention to me at all. You do your own thing, but back testing, that's not up for debate. That's not my rules, really. That's just common sense. Back test the same time frame, the same instrument 100 times, or 20 times, or 50 times. You know, have a decent record. And that's what we're attempting to do right now with these 3 strategies. I'm going to try and not fudge any of the results, just call the trade, take the trade, put the trade on, see what the outcome is. Then at the end of the month, I'll have a look. Then at the end of maybe 3 months, I'll have another look, 6 months, a year, and have some powerful data to then work off. What else have we got here? What questions? I'm using strength. Let's have a look at YouTube. Scalp is just the size of the move. Are you in the new money Discord group? Okay. Scalping is like 1 to 5 pips, taking a few ticks. That's what scalping is. Someone was talking about scalping today, and they said, yeah, generally I look for 20 pips. I'm like, well, that's not scalping. What is the biggest loss you've taken? Number of losses.
10 millions.
No, thanks for that. Thanks for that, Jay. So you always has to keep it real. I think let's talk about the first major big loss that I had was going back to about 2008, and it was about 40k in about 4 or 5 days. And I was up at about 5 in the morning till about midnight, and I was over trading, and I was just all over the place with it, and my timing was off, and we were going into a recession, so everything become really volatile, and I was trading options on the S&P 500, and you know, you normally put puts and calls, so you're going long and short, and you're straddling the market, so you have puts on calls on. When it goes up and to profit, you close them, and you're hedging basically, and it goes down. And obviously with volatility like that, it's going one way, and if you don't know what you're doing and managing the risk and all the rest of it, it can get all a bit out of control very, very quickly. So you need to have certain market conditions for that strategy to work, and that was that. And then I've had other disasters over the years for definite, and there will always be disasters for sure. But I think what we're doing right now is quite calm and collective, and I think identifying risk is really, really important. Take your time, yeah. Take your time. That's it. That's what we do. Take your time. That's the tip that we give people. Have you got somewhere else to be? Why are you in such a rush? What are you doing? Take your time with entering the trade as well. If you want to do it with a 764 strategy, wait for it to hit the 76.4. If it's sitting between the 618 and 764 and you're just getting impatient, then you know sometimes it might not work. Don't take the trade. Or if you do want to put some skin in the game, maybe put in, like, I don't know, 0.25% or something, just to dip your toe in the water. So understand that these are things that I can't control. I can't tell you how to do that. It's down to you. That's what defines you as a trader. But I'd say for anyone who becomes a funded trader, just trade 0.25%. Once you've done all that work, you know, you've battle tested everything and you've passed stage 1, stage 2. You've now been given some money to trade and manage. You're a money manager. Take that seriously. 0.25%. I keep seeing people talk about 2%, 2.5%, 5%. 1%'s all right. We can up it. We're having a good run. We can up it to 2%. I'm like, well, yeah. And then someone pointed out and said, but what if you go on a winning run and you get really confident, you start increasing your risk, and then you have a loss and it just wipes out all your wins? Oh, here we go again. Shut up. Anyway, yeah, hopefully that's answered some questions. Who was my mentor? Me. Right, shall we look at anything else quickly? Let's look at gold very, very quickly on the 4 hour. So yeah, 4 hour.
I know you lost way more than 40K.
Oh yeah, of course I have. I've lost more than that. I've lost hundreds of thousands over the years. Of course. That's why we've been around for as long as we've been around. Why do you think I haven't retired yet and put my feet up? What, you know? But this is hopefully the last element of my trading career, in terms of sharing and trying to put some content out there and hopefully help some of the newbies, because realistically 90% plus of you will fail. It would be nice to contribute something of value that say, well, look, I've been there and I've done that, and I don't want you to make the same mistakes. You will make the same mistakes, but maybe they won't be so disastrous for you as they were for me, you know. So there's certain things there that you have to consider, and each to their own. You can't mollycoddle, can't hold your hand through it, but just make you aware the game's rigged, it's manipulated, and it's rigged. It's not rigged in your favour. It's not designed for you to come in and make money. So you understand that the odds are stacked firmly against you, and they will always be firmly stacked against you. Anything you do may give you a slight edge, but it's very minimal, and so you know that's it. You know, just be realistic and understand that. Use common sense where you can. It's common sense. A lot of it is common sense, not placing trades, but it's common sense of, you know, what's happening. Is now the right time to trade? You know, 3 o'clock in the morning during the Asian session. Really, is that what you want to do, or do you think there was a better time to take this trade? You know, just certain things. Sometimes you've got to ask yourself. You get so caught up in the moment that you're a normal, common sense, upstanding citizen. Normally, everything in your life is pretty decent. You're quite controlled, and you know what you're doing. And when it comes to trading, you're a completely different person. It's like road rage. You know, you're this really nice, sweet person, and then when you get in a car, you're swearing and sticking your finger up at the other drivers because they cut you up, and you turn into a right animal. And it's same with trading. You just turn into someone else. It's hilarious. Anyway, there you go. Have a good day, everyone. Have a lovely weekend. I'm going. I'm out of here. I'm done. Thanks very much for your time, and see what happens with the US session in 15 minutes.
Bye, Alex. Thanks.
Yeah, see you later, everyone. Bye. Okay, mate, don't be too honest. You're such an arsehole.